Welcome to Lesson 2, Overview of the Closing Process. We are in the home stretch, and this is where it all comes together. All the hard work, all the paperwork, all the questions, and it's so exciting because you're almost to the finish line. So in this part, we've gone through, in Lesson 1, we went through the first 14 days where you're getting all the emails, things are ordered, you're shopping for insurance, you had inspections on the property, the lender ordered the appraisal. This really gets us to that first 2 weeks of the process. So now we're kind of right in the middle. So what happens then? So the lender is going to accumulate all of this information from all of the entities that are involved. There's a title company involved, and they're researching title to make sure you have clear title to the property and that the seller's cousin's girlfriend's husband or ex-husband doesn't somehow in there have access to the property. Literally, that's what happens. And so all that is checked out. They're gathering your insurance information, making sure your payment's intact. We're gathering information if there's a homeowners association, we're gathering that information. So all of these entities, all the roads are leading to the lender to make sure that all of the numbers are intact, that your payment is exactly known, that everything is verified to the penny, by the way. It's submitted to the underwriter for a final sign-off. I know this sounds crazy, but we've had to resubmit to underwriting even for a $5 difference in the payment. Lenders leave nothing to chance. So this is the really crunch time in the process where they they have all the bills, all the numbers. It's submitted to final underwriting. And in the best case scenario, it's checked off and you get a clear to close. That's what it's called, a clear to close. But expect that at this part of the process, midway, maybe a couple weeks before closing, in that final submission to underwriting, it is normal that there's 1 or 2 questions that have to be answered and maybe a document or 2 that might need to be submitted. This is completely normal. Hopefully it won't happen if the lender did a super thorough job on the front end, but sometimes surprises happen. So be prepared. So now you're in the home stretch. Everything has been signed off. The appraisal is in, it met value, not a problem, and it's ready to go into the closing. Now, I'm actually gonna say one thing. I just said that the appraisal met value, and actually I just thought of a question that I get a lot that I think you're probably thinking right now. Jennifer, what if the house doesn't appraise for what I'm buying it for? What does that mean? This could actually blow up the transaction. I'll be honest with you. We've seen this make things come to a halt, and we've seen this where sellers will renegotiate. So I think it's important to mention that at this part of the process, and it's usually a couple weeks after the contract, because remember, you're doing inspections, then you're getting an appraisal. Well, we don't know the value of the appraisal until it's done. It usually takes about a week. So we receive the appraisal. Let's say in that example that we used earlier that you're buying it for $500,000. Let's say that the appraisal comes in for $490,000. So that's $10,000 less. There's actually several things that can happen at this point. So let's say it came in at $490,000. I'm trying to keep this simple because this can get really complicated. So everyone freaks out. Let me just tell you, realtors freak out, sellers freak out. Buyers, I'm hoping, are like, yeah, I might get a lower price for the house. So let's talk about what happens. We give the appraisal to the buyer and say, because you're our first allegiance, by the way. I would never, but lenders should never communicate to anyone else other than you to give you this news. Hey, it came in at $490,000. We can either get information from the agents to see if there's something that the appraiser missed. I mean, we've seen appraisals be wrong, the wrong room count, the wrong bathroom count. I mean, it happens. So there's a rebuttal period where the agents can provide comparables to support the $500 instead of the $490. If that doesn't work, there's renegotiation, possibly. You could go in and say, I'll pay $490. Will you come down to $490? The seller does not have to come down on the price. I just want to mention that. They're under no obligation. Now, it would be kind of silly if they walk away from the deal a week before closing for $10,000, but that's not your decision to make, right? So negotiation usually tries to happen. Let's say that doesn't work. You have to make the decision, am I going to pay the extra $10,000 out of my pocket? Because the lender is only going to loan you the percent of the loan that you were approved for based on the $490. So this is a really important point. If you were getting a 95% loan, they're going to loan you 95% of $490 instead of $500. So to make a long story really short for you, you're coming up with an extra $10,000, okay? So when this happens, and it can get a little bit more complicated than this, it's a great idea to talk to the lender, find out what the choices are, but that's usually, of course, what they are. So what if the seller doesn't negotiate, and what if you don't have the extra $10,000? You could not possibly buy the house. They could just blow up. Your appraisal money would be lost. Your inspection money would be lost. Time would be lost. Heartache would be lost. Now, in my years of experience, I've had thousands of transactions happen. It's a very small percentage where things don't work out. But this is, once again, an important reason to have an excellent lender who's going to communicate to you properly what are my choices, and also a good realtor that's going to be able to negotiate with you. Imagine not being represented and not having a realtor on your side and having to go to a seller and negotiate. And I mean, it's mind-boggling. So I thought that this was a really important topic to really bring all this together. So we took a segue, but I knew you were asking the question. As I was talking, I just knew that you were asking the question. So I thought that it was really important for us to cover it. And this is called appraisal shortage. So it's not impossible for everything to work out. It's just, do you negotiate? Do you meet halfway? Do you pay the difference? Lots of different options there, okay? Now, we're gonna move on. So let's say we get past that point, everybody's in agreement, and it's on its way to the closing. By law, you have to receive from the lender at least 3 days before the closing something that's called a closing disclosure. This is all the financial information that is all the final numbers, that everything is exact, okay? So you're gonna receive this 3 days before. Now, sometimes there's some little changes here and there after this period, but the lender is obligated for you to review this closing disclosure to make sure that you don't have any surprises. Remember earlier when I mentioned that the consumer really holds all the cards here. The government has laws and regulations in place to make sure that you are protected at every turn. And this is one of those times. So this closing disclosure, you're going to get all the numbers, and then you're going to have your money ordered for closing. So whatever the amount of money that you need, I'm just going to make up a number super specific. I'm just going to say you need $10,000. Obviously, it's going to be to the penny and to the cent. It's never an even number, but I'm going to say that it was $10,000. You will need to get either a wire or a cashier's check. There's no other types of money that's accepted for closing. You can't come with cash. You can't come with a money order. You can't do that. This is actually really important to make sure that you make note that you'll need to ask the title company or the attorney, whatever state you live in, make sure to consult with, lender, realtor, the people that are aiding you for the money for closing. Who do I pay it to? Do they accept cashier check or wire, or both? There are some, there's lots of fraud. There's lots of cyber fraud. So there's some title companies or attorneys that might not accept money a certain way. So this is really important. Another important thing that I'll mention, with technology increasing and online banking, we've seen lots of people. I've seen a big increase in people that have banks online. It's not easy to get a wire or a cashier's check all the time. In fact, a cashier's check, if you have an online bank, it's not possible. And wires might either require a form, they might require extra time. We've even had some banks in some towns require, some smaller towns require that you present yourself in person. And if your bank is in Ohio and you're moving to Texas and you're in Texas, how are you going to go present yourself in Ohio for the cashier's check? So these are things that it's important to make sure that in your notes, you make sure to check, how is the money accepted and how am I going to get this money, so that you're not blindsided with this a couple of days before closing when it might be a little bit too late. So this is a really important part of the process. Another thing that I'll mention, if you're married and you live in a community property state, your spouse must show up at the closing if you're buying your primary residence. Now, if you're buying an investment property, not the case. But there's a lot of community property states around there. I happen to live in one of them. So this is sometimes a big surprise to people, like, what do you mean my spouse has to show up? So just make sure that in the state that you live in, this is, again, one of the questions that you should ask at kind of the beginning of the process to make sure, and hopefully your lender's going over it with you, but sometimes it happens and they don't. It's important that you know who has to show up at closing. Does my spouse have to be there? So we've covered a lot of ground. We've covered a lot of details. Hang in there with me. We are in the home stretch. So we're talking about closing, lots of details coming to head at this particular point. We've got money, we've got disclosures, we've got spouses. Jennifer, where do I sign? It depends. Many times people will go to the title company or an attorney's office. If you're in a state, the state that I live, we don't go to attorney's offices, we go to the title company. So again, they'll lead you, your realtor and your lender will lead you through this, but you will be going to someplace to sign documents in person. Now, for buyers, 100% virtual signing is not a thing yet, as of the time that I'm making this course. Now, that could change in the future, but there are documents that you will e-sign. With most lenders, they'll have you the morning of closing docu-sign some documents, and then you'll show in person in front of a notary, usually at the title company, and you'll sign certain documents in person. So the closing can take anywhere from 30 minutes to an hour, just depending. Now you're probably asking, when do I get my keys? So this will vary from state to state. So it's another important thing to check on your list of notes, to check with your professionals, your lender and your realtor, when what we call the funding will be possible. But when the seller and the buyer both sign their pertinent documents, they're sent back to the lender to make sure that everybody has signed, and then the lender sends the money to the closing to merge it together with the buyer's money, if applicable, that was due at the closing. This is called the funding, and this is when everything becomes official. The lender will say, okay, green light, then it's done. That's when you're going to get your keys after what we call this funding process. You've now got your keys. Congratulations, you're in your home. The hard work was worth it. This ends Lesson 2, Module 4.